Hello, good morning, and welcome to IG's early morning call on IG Live on the 1st of August 2023. Coming up in today's program, Australia holds interest rates at 4.1%, but signals that further hikes may be needed. HSBC lifts its outlook as its profits beat. And a European earnings bonanza awaits investors eyeing BP, Greggs, and Diageo and Pfizer a little later on as well. Now, with 30 minutes to go until the European market opens, this is how the pre-market is looking across Europe. The FTSE, the DAX, the CAC, indicating a slightly lower open on the futures. This is a longer term view of the FTSE. And as you can see here, it is still able to keep its head above the 7693 level after falling down towards this 7,300 resistance point before bouncing back up. And it looks like now perhaps we could see a further move up towards the 7,800 level. And if it breaks that, then perhaps the 7,900 will be the next trajectory or resistance point for the FTSE. Looking at the CAC as well, similar picture there, as you can see with my trend lines, it is grinding slowly upwards, and a similar picture on the DAX as well, otherwise known as the Germany 40. Many of these markets have started grinding higher as hopes of the Fed coming to the peak of its tightening cycle take hold. Overnight in Asia for the month, China's CSI 300 and the Hang Seng advanced 4.5% and 6.1% respectively. That's for the month, notching their largest monthly percentage gains since January. Also want to add that the Nikkei, which ended higher there, for the month it was the outlier because it ended the month essentially unchanged. Checking in on the Wall Street close for you. Wall Street ended a strong July thanks to upbeat company earnings and hopes of that soft landing for a resilient US economy. All three major stock indices ended with gains for the month ahead of a busy week of earnings with big names like Amazon and Apple due out, as well as the jobs report. And also just checking in on early trade for you because we are still hours yet from the open. However, we're looking at quite a cautious start. Bear in mind, though, that we're seeing that similar grind higher, and many market watchers have been confounded, and they're now hoping that we get this continuation of this Goldilocks economy in the US. Turning to Australia, and the Reserve Bank of Australia has kept its interest rates unchanged for a second month in a row. Just showing you the animation there, keeping interest rates at 4.1%. The RBA has hiked rates by a cumulative 400 basis points since May 2022 to its highest level in 11 years, might I add. Inflation in Australia, like in many parts of the world, is very sticky. It's slowed to 6% in Q2 from the 7% increase recorded in Q1. Still well above the RBA's 2 to 3% target. Now, HSBC, another one I want to talk about, rewarding its investors with fresh share buybacks of up to $2 billion. Just checking out the results for you. First half profit surging more than twofold. HSBC upping its near-term return on tangible equity goal as well, and says this fresh buyback is set to begin. Europe's biggest bank with a market cap of $162 billion, reporting a pre-tax profit of $21.7 billion for the first 6 months of this year versus $9.2 billion a year earlier. That was a beat, by the way. This was, as I mentioned earlier, thanks to rising interest rates worldwide and gains from the planned sale of its French unit. HSBC's shares in Hong Kong jumped as well to their highest level since May 2019. Now, just an update on some breaking news. Not too long ago, China's factory activity swung to contraction in July. A private sector survey showed supply and demand and export orders all worsened as companies there blamed the market conditions abroad and at home as well. As you well know, China has said that it may well come out with more support measures to try and get its economy, which has been described as tortuous, out of the doldrums and well on the post-lockdown recovery. Another bit of breaking news, British house prices fell by 3.8% in annual terms in July. This was the biggest drop since July 2009. This is according to numbers from Nationwide. Many of these numbers from the housing market have largely been expected and factored in. However, this one seems quite is actually quite the most serious of late. British house prices, I repeat, falling by 3.8% in annual terms, according to Nationwide. Just checking in on Persimmon, as you can see there, quite a bit of weakness since around the June period, and checking on Taylor Wimpey as well, because many of these house builders have been quite volatile. As you can see, they have been struggling to try and get up to previous highs seen in May. However, we are seeing quite a lot of sour mood music coming out of the UK housing industry of late and the property market. And don't forget, a little later in the morning, we'll also get numbers out of Germany, the latest snapshot on the German labour market, with unemployment numbers due around 8:55 BST. And just want to check in on oil for you, because that's another volatile financial asset that our clients watch very closely. Crude there, oil benchmark settling at the highest level since April 17th. Analysts expecting Riyadh to extend voluntary cuts by a month. OPEC, their output also seeing a fall, or causing a fall in output in July. Demand hit a record 102.8 million barrels per day in July, though, says Goldman Sachs. Now, BP is another big one, speaking of oil, reporting early this session. Second quarter profits there coming in at $2.6 billion. This missed forecast and was 70% lower from a year earlier because oil prices, fuel prices, cooled. Let's just take a look at BP's chart for you. BP has been as volatile as the oil market, as you can see there. The oil giant, though, has boosted its dividend by 10%. So we'll see how that goes when the market opens. Another one I want to show you is Greggs, because Greggs has also come out with earnings. It's the British bakery and fast food chain, famous for its turkey rolls, or rather its vegan rolls as well. It has reported a 14% rise in first half profit and said it remained on course to meet its annual forecast. This is as inflation cools and new stores that it's opening come online. And Diageo, plenty of earnings today. We're trying to get through all of them for you. Diageo is a really interesting one. This is the spirits maker. They make Johnny Walker whiskey as well as Captain Morgan's rum. Organic net sales there rose 6.5% in the year to June 30th. This beat analysts' forecasts marginally, though, and they were expecting 6.4%. So a slight beat there for Diageo. And last but not least, just wanting to show you gold, because this precious metal has been moving quite significantly, might I add. Gold has been creeping higher before hitting that 1980 resistance, falling back, and it looks like it is now attempting a second lunge at that resistance level. Spot gold has found a floor at around 1911. However, demand is still at an 11-year high, and the support is coming from central bank purchases as well. But in the first half of 2023, central banks bought 387 metric tons of gold, more than in any January to June period, if you look at data going all the way back to the year 2000. However, the World Gold Council says that gold demand, excluding OTC, over the counter, trading fell 2% year on year in Q2 of 2023 as central banks started to pare back their purchases. And that's it for now. Before I let you go, here's a last look at the equity markets for you as we count down to the open. Here's the FTSE. We are looking at a cautious open, but of course we've had quite a grind up for these indices. Here's the DAX and a final look at the CAC 40. Similar picture there. And that is it for me. Do tune in at 10:30 for charting, and also for Beat the Street at 13:30 London time. Do follow me on Twitter on @IGCom and @Angeline Ong. Until then, this is IGTV.